Janelle, I can't believe we're almost at the end of the year. What are you thinking about doing over the holidays?
Well, Eric, as someone working in venture capital, I'm planning to worry about valuations in the post-ZIRP period, fundraisability of funds 1 and 2 during periods of capital constraint, and tracking whether interest rates will drop in 2025 to free up more capital.
Oh, well, I was going to take my kids skiing.
Yeah, that too.
I can't believe that we're towards the end of 2024, wrapping up another exciting year of startups and venture. And all I really want to do for the holidays is for you, our viewer, to like and subscribe to Uncapped Notes. Okay, now that I got that plug out of the way, Janelle, let's talk about those topics that VCs are actually worried about at the end of 2024 from that opening skit.
Well, the first thing I mentioned was a joke about valuation in the post-ZIRP period. Let's first define what we mean by ZIRP. This refers to zero interest rate policy. When interest rates were low a few years ago, the general effect is that money starts to freely flow into the economy. And people who are allocating into venture and startups tend to be more risk on during these periods.
Yeah, we don't have enough time to get into the full macroeconomic explanation of what Janelle described, but the correlation is absolutely true. Lower interest rates, more capital, and more risk. That is how so many VC funds were able to form during the last few years, and how so many companies were able to get funded and achieve sky-high valuations. There was competition on the capital side to deploy into great companies.
Eventually, though, the show had to stop, and interest rates went up, and what you might predict happened. Capital became more scarce, valuations dropped, and VC funds who deployed during the ZIRP era had to report huge markdowns in the value of their portfolio.
Yeah, that is a big problem when you are managing LP money. And this is a good segue into the second point that you raised, Janelle, in the skit, which is the fundraisability of funds 1 and 2 during this period of post-ZIRP capital constraint.
Eric, can you share more about why fundraisability is a concern for VCs raising their first or second funds?
Yeah. During these periods of capital constraints, everyone is affected. Startups will have a hard time raising capital, and nearly all VCs who raise now should see a lot of slowdown. But there is real concern among VCs in their funds 1 and 2 about whether they can even survive this period.
Okay, I see where you're going with this. If I'm an emerging manager raising either my first or second funds, is the concern that LPs, who are the investors of the funds, are not excited to take a risk on a new manager?
That's pretty much it. Raising a first or second fund is similar to being a pre-seed founder, where people are taking a bet on you as the general partner of a fund. And there is yet to be any meaningful data. When capital is constrained, like it is now, then LPs will get more conservative and want to emphasize backing managers with proven track records and differentiation. And you're going to find that more in managers who are a bit more established or have been in the game longer, or is a known multi-stage fund that has existed for decades. It's like a flight to safety vibe.
Okay, the last thing I mentioned in that opening skit, which is really top of mind, is whether interest rates may drop in 2025.
Yeah, I think that the prevailing expectation and certainly the hope for many managers is that interest rates will continue to drop. It might be good, Janelle, to summarize what we think happens as a result.
Actually, this is a good summary of the entire discussion. If interest rates are correlated to access to money and risk, then theoretically, dropping interest rates will indeed free up more cash and result in more risk-on vibes in the market. This should, in theory, make it easier for VCs to raise capital, and as a result, for founders to get capital from VCs.
It's hopium, for sure. At the end of the day, our industry doesn't have control over interest rate policy. But yeah, I do know for a fact that there are a ton of VC funds who are hoping that the interest rates continue to fall in 2025 and that they will time their own fundraises as capital loosens up and risk appetite goes up as well.
Well, if that does happen, I can't imagine a better end of year holiday gift for VCs and startups.
We designed Uncapped Notes to be a series to help founders through their fundraising and startup journeys, but we thought that sharing a timely video today about what VCs are talking about at the end of this year would be helpful for founders to learn about.
We want to remind you, though, that regardless of macroeconomic conditions, building a startup is a long-term thing. Yes, there will be frothy times, and yes, there will be challenging times. But if you keep your head down and you focus on what you can control and just keep building, then that is the best any of us can do.
Thanks for watching, and please give us that wonderful holiday gift of liking and subscribing to Uncapped Notes.